Well, the crude oil prices is what I'm talking about, which have seen some pressure after a 6% decline overnight. We have seen pressure continuing today as well. It is about the slowdown in the global markets, the increase in COVID cases, and we also are looking at the U.S. production increase quite sharply to 11 million barrels per day. This was at 10.5 in the previous week. We also are looking at the U.S. inventory surge to record for a third straight week, with crude prices holding around that $35 to $40 per barrel mark. There is U.S. shale output coming back on the surface as well, and that's weighing onto the prices there. Also, when you look at the Chinese imports, they are expected to slow down. The India oil imports for the month of May were the lowest since October 2011, and these are the major consumers. So you are looking at cracks in the demand, and that's weighing onto the prices. We are joined by Peter McGuire now. Peter, hi, good to have you. What is your sense, first of all, on prices? Did we see the run up too much too soon? Are we looking at some consolidation now? How do you look at the prices playing out?
Well, good afternoon, Manisha. I tell you what, there's a couple of major concerns if you look at it, I think, across the broad range. Are they totally juiced up? I think that the markets are totally juiced. You've seen the recovery phase over the 3 months as far as equities, and that took crude up. And there was always this good news story. It's going to get stronger. It's going to get better. July is going to increase, August and September. We've just had the worst numbers in history in the US, 36,000 cases yesterday. That was the biggest number versus the 25th of April. So they're spiking again. Then you've got the front load. I think it's everything as far as this crude recovery is being front loaded. So I think it's, again, fully juiced. So I think there's further softness from here. And let's see what happens as far as these COVID numbers.
How are you also looking at the output increasing yet again? On one side, while we have the OPEC and allies continue to try to increase compliance, but on the other side, the non-OPEC supplies are coming back yet again. Is that a worrisome number? Do you see pressure come in on the prices because of that? Or you think that that's already in the price by now?
Well, I think it's already in the price, but that shows you the dislocation between OPEC Plus and the other producers. And you're seeing what's happening as far as those US numbers, back above 11 million barrels per day as far as production. So that's really hitting the ball out of the park. They're only interested in one thing, and that's to increase their production. They've got to get all these people back employed. And like it or not, they're all thinking that the US is going to be the with a strong wind in their sails, is going to perform very well over this Northern Hemisphere summer. But I'm in two minds on that. So then you're looking at the other side as far as compliance across OPEC Plus. Is it going to hold together? No one has a crystal ball. We're 6 months from Christmas, and I think it's going to be a very rocky road. You've got a presidential election in 4 months, and there's so many moving parts to this. I think there's a lot of volatility to come, Manisha. I think it's going to increase dramatically over the next month or two.
Peter, when you look at the global banks and brokerages, they are of the view that the crude prices will consolidate here. We also have seen price outlooks of, $48, $50 on the higher side in the next 6 or 8 months. Do you see that kind of a recovery? This whole hope that, or rather the calculation that we'll see a deficit going forward in crude supplies, how do you hold those numbers?
I don't necessarily think you'll see a deficit as far as supply because there's that much crude out there. There's not a problem in getting it. The next part of it's going to be, is there a dislocation between reality as far as these banks are concerned and what the real picture is as far as COVID? Does Europe get a second wave that we're seeing in America now, or a continuation of the first wave? And the reality of the matter is that there's all that uncertainty goes back to we're totally juiced up. We've front-loaded the crude recovery. And I feel as though to get to anywhere near $45 to $50 is, a pantomime. It's a feel-good story. That's what you put a little child to bed with, that good news story that Santa Claus is coming. And I don't really think Santa Claus is coming this year, Manisha. It's a very bleak next 3 months. So, yeah, I think it's going to be softer from here, not that fairy tale ending that many of the bankers are proposing. Maybe they're trying to get their bonuses up, Manisha. That might be what they're hoping for. The reality of the matter is it's a bleak world out there.
Well, yes, there's no fairy tale outside, and that perhaps there's no Santa Claus coming. But Peter, what is your own sense then on where the crude prices are headed for the quarter next and the final quarter of this calendar year? How are you breaking the crude prices and demand scenario going forward?
I think that it's going to be very hard to contemplate where do you see pricing because of so many uncertainties. I don't know whether you're going to see a sell-off as far as US equities, and that's going to create, I think, a lot of concern there, especially in do they really just front-load everything and continue stimulus, and regardless, I don't think you're going to see further lockdowns. So there might be a little bit of softness from here, maybe a couple of more dollars wash out, but I'd say it'll be around that $35 to $40 range. US dollar is the unknown target. Does it get sold off, or is it still the best house in the worst street? And I think that the potential to make a dollar at the moment trading has got to come back to gold. So I know that's a little bit off question, but that's where I think that many of the traders are going to look for opportunity in the short to medium term because too much global uncertainty, Manisha.